Hi and welcome to NABTrade's end of financial year special. Just here to give you some ideas and thoughts about how you might like to look at your portfolio coming into this important time of the year. We are really fortunate today. We've got Scott Phillips with us from the Motley Fool. Thanks so much for joining us, Scott.
Gemma, g'day. Always love being with you. It's always a fun chat. Looking forward to it.
We are always lucky to have you join us. So, what are your thoughts about end of financial year? Let's start with that. We sort of make a big song and dance about it, but is it actually a useful time to look at your portfolio?
No, but also absolutely. So let me do both of those at the same time. What I really hate is investors who say, I'm going to try and save money on tax. Now, don't get me wrong. You shouldn't pay more tax than you have to, but that's letting the cart drag the horse, right? You've got to make sure your focus is on after-tax returns, not tax minimization. If they sound like the same thing, they're really not. So I want people to remember it's all about maximizing your returns after tax. Now, so effectively, is June 30 a big deal? Well, kind of. It's the end of the tax year, right? And so if there are some tax relevant decisions you can make, then yes, making them on June 30 or before is better than making them on July 1, particularly when it comes to the timing of the cash flows. I just don't want people to start saying, I'm doing this to save money on tax. It's a terrible way to do it. But if you're going to look at your portfolio, if you're going to review what's going on, if you're going to really have a good look, sometimes the end of the financial year is a great opportunity because it makes you kind of have that conversation with yourself, right? The losers you've been hanging on to because maybe they'll come good and it's been a month or a year or a couple of years and you're still waiting. If the tax opportunity is the extra push you need to make a good investment decision in the first place, then that is an excellent opportunity to do so. The other thing, of course, is we talk about June 30 and we talk about what should we do at the end of the year? The reality is most of the opportunity is already gone. So while we're at the end of financial year, yes, look at this year's tax and this year's implications. The other thing, though, is to think about next year and start planning in ahead so you've got a full year to get those things right rather than trying to make last-minute decisions in the last couple of weeks of the financial year.
So we'll take it that it's kind of a catalyst more than anything else. It's not necessarily that you're doing a whole lot of sophisticated planning, but we all need to have some catalyst to look at our portfolios. Some of us have more discipline than others, not going to mention any names in that category, but some more than others, let's say. So when you're looking at your portfolio, or you're suggesting that people look at their portfolios now, if they have some cash to deploy, what are the sorts of opportunities you think they should be looking at?
So it's a really funny time, right? We've got markets, believe it or not, near all-time highs despite all of the ructions of the last 6 months. It's been an incredibly volatile 6 months, and I dare say we'll have another 3.5 years, but quite frankly, we all know why that is. The reality, though, is that because markets are at near kind of close to all-time highs, there's not a huge amount of really obvious opportunities available. I'm always happiest being the optimist in a room of pessimists, right? When the market's low, I'm always happy because I know that the market will go up. I believe it will over time. So I'm always happy when everyone else is doom and glooming. I'm like, this is a great opportunity. The flip side of that is when the market's high and everyone's excited, I'm kind of like, don't get too carried away here, guys. So, and I hate the phrase stock pickers market, Gemma, you know that, but it kind of is. There's very little in the way of thematic opportunity. There's very little in the way of general market clear opportunity. I think markets go up, by the way. If you bought a market index ETF, you'll do really well over the very long term. So I'm not worried about it at all. But if you think about specific opportunities, it is kind of a stock pickers market. And I got to say, well, I'm not a contrarian by nature. I do love looking for those, the bombed out, the unloved, the left alones, that kind of stuff. They're the companies I think I want to have a look at. When the market's freaking out about short-term risk, but there's significant long-term return potential, that's exactly where I'm looking. So I'm probably at the moment going to start with those companies that the people aren't loving. I don't love the kind of 52-week high, 52-week low lists for their own sake, but they can be interesting places to start looking. Say, hey, what aren't people liking? Now, if something's down, it's probably down for a good reason, by the way. The market's right pretty often. Not all the time, but pretty often. So don't just buy stuff because it's down. Don't just sell stuff because it's up, by the way. But really look hard at, firstly, go for quality businesses, right? So quality, number one. If you can't get a great price, get a good price for a quality business. It goes off Warren Buffett, and no surprise there. So go for quality, and then go for prices that aren't particularly expensive. Again, not looking for bombed out stuff necessarily. It's cheap stuff will be cheap for a reason. But look for those stocks that people are overlooking, they're unloved, or they're worried about the short term and missing the long-term opportunity.
I really love that framing. I think that's a great way for people to think about it, particularly your point about quality in this environment, because it could get interesting. Any names you suggest people should maybe take a closer look at the moment?
Yeah, look, I should come out I own, so I'll declare that up front. But Treasury Wine Estates is really bombed out right now. Combinations of changing leadership. They're not sure what they're going to do with their kind of non-prestige brands. US tariffs kind of weighed on them, even though the company came out and said, look, it's about a 4% impact. Don't worry about it. But the shares are absolutely bombed out. So that's one I like personally. I think the cash flow is really great. Yes, they've got some mediocre, rubbish brands, but the Penfolds brand is astonishing. If you look at the numbers, the Penfolds business is just incredible. So I think that's going to be a really good long-term success story, particularly as China continues to reopen to Australian wine and then grow just by its own natural, the affluence that's being created in China is going to create more demand for Australian wine. So that one for me, I think is an easy one you want to have a look at. On a quality level, you want to go for the businesses. Founder-owner businesses are always good business to kind of look at. I like corporate travel management. It's one I've mentioned with you before, Gemma. Same thing, bombed out. The shares are something like, I don't know, maybe 60%, maybe a third off some of their highs in recent years. And yet the business is probably more profitable and in a better position than it was in 2019, pre-COVID, right? So we're going to look back to that for travel stocks and go, hang on, the company's much better off. Share price is probably, as I said, down by a third, maybe even 40% since then. So you've got a better business, cheaper price. I reckon that's a pretty good deal. So there's two I own, two I like, two I'd be buying right now.
They're both great ones to have a bit of a think about. Little bit of a moment left to chat. Where do you think people should be maybe trimming if they're overexposed, or where you think there might be some threats people should be a bit concerned about?
Let me annoy most people watching Gemma and say I think the banks are still really expensive. They have not grown meaningfully, if at all, over the last 3 or 4 years. Some of the P's, particularly CBA, is just nosebleed territory. Is it the best of the banks? Yes, clearly. Is it worth paying, 20-something times earnings for a business growing at a couple of % a year? No. It is the safety trade, which is fine, but if the safety trade unwinds, when people go, oh, actually, things are okay now, the downside on that is more significant than the upside, in my opinion. So I'd be very, very careful there. Also be careful of some of the commodity stocks where the commodities themselves have run pretty hard. Commodities trading is really tough at the best of times. Trying to find, guess where the price might be in 6 or 12 months is really, really difficult. We've seen that with lithium, by the way. This one you and I have talked about before, and I warned our viewers and listeners about it over lots of time. It is one I think is really worth just being very careful about. But commodities in general, just be careful how hot that's running, and just maybe take a little bit of a step back where the prices are running too hot. The commodity prices, that is, the share price as well, obviously. But they're probably the two areas, by the way, two largest sectors. So I pretty much just poo-pooed almost half the market. But there are opportunities there. If you want to buy a bank, I would buy one of the others other than Commonwealth. Frankly, some of the P is almost half the Commonwealth Bank P. It's crazy. And then mining, my preference, if you're going to play in the resources space, is look for low share prices and low commodity prices. Why? Because they're cyclical. So if you're at the bottom or towards the bottom of the cycle, you have to pick it necessarily to say, is the price meaningfully lower than it has been in the past? Yes. Okay, well, chances are there's downside risk, but much more upside return. That imbalance, if you like, the asymmetry between the risk and return, that's where I'd be looking to play if I was going to look in resources or materials more broadly.
Scott, it's always fantastic to get your views. Thank you so much for joining us.
Enjoy it. Thanks very much.